Okay.
Literally just came across on my bumper.
Hey everyone, this is Tasha Danielle here. I am founder of Financial Garden. I'm so excited for this live today. We're going to have Mr. Shawn Jones on. He is a senior mortgage banker at a big bank, and he will be on in about 10 minutes. But if you have any questions about mortgages, go ahead and drop them in the comments while we wait for him to join. And I want to say that we're going to be going over like very detailed steps what you need to do to get approved for a mortgage. So if you ever had questions about what should my credit score be, or if you ever been denied a mortgage before and you're just confused on why, we're going to be going into details on what lenders are looking for you to actually be approved for a mortgage. And stay tuned to the end if you have questions or want to hear about the process for home equity loans. We will be discussing that as well too. But before digging into all of that, I want to just put out a disclaimer that I am a licensed CPA, but this and the mortgage banker that's going to be on is licensed as well. He's licensed in over 20 states, but this is in no way to take place of you working one-on-one with a CPA or a mortgage banker on your own. So I just want to put that disclaimer out there. So this is just for educational purposes only. So if you have any questions, drop them in. But I want to give a little background about my story and how I got into real estate. If you don't know, I paid off $80,000 of debt before the age of 30. And after doing that, I decided to get started with real estate investing. And it was it was not intended. That was not my original intent, but I purchased a multifamily home and I rent one unit out and I stay in the other. So I wanted to do real estate week to kind of talk about what it means to be a homeowner and not just say, oh, everyone should own their home eventually or plan to, but actually walk people through the steps to home ownership to actually get there. So again, if you have any questions about the mortgages or anything, drop them in. So today it will be Shawn Jones on talking about mortgages, and tomorrow I'm going to have on Rochelle Monte, who is a real estate broker, and she's going to be giving you tips on what you should do if you're looking for a real estate agent and what it's like going through the home buying process, and giving tips if you want to have put your home on the market during COVID. I know a lot of people think that the market is not hot right now, but when talking with her, she's like she's just as busy as she's ever been in any other summer or spring time frame. So even with COVID going on, even during the March period, she was very busy showing home. So she'll be on giving you insight on that. And then on Wednesday, definitely tune on if you're thinking about buying a home from auction. I'm going to have on Edie Northington. He and his wife purchased several properties through online auctions in the city of Detroit. They have several homes that they are renting out in the city and going through the details of that. I'm interested in buying a home through the auction process. So if you are, drop a comment because I want to know what your thoughts are on buying a home through auction. For me, it's a little nerve wracking because I don't know what the process is like to go actually look at the home. Like, what if I place a bid on a home that sucks, like needs a lot of work, and I had no idea about it? I couldn't go in and see the home before purchasing it. So Ed is going to be walking through that process. He has a really great story. And then on Thursday, I'm going to bring Rochelle Monte back to talk about her experience as a property manager and as a landlord, which is the same thing, but she's a broker, but talking about getting ready for that to be an official property manager, and then talking about being a homeowner and being a landlord tenant. So, good afternoon, Tanya Phillips. Thank you for your comment while we're waiting for Mr. Shawn Jones to join us. He should be on in a few minutes, so don't go away. He's going to be on, and we're going to get started shortly. But while we're waiting, I'll go more into detail about my personal mortgage process. So when I was considering buying my first home, I didn't know if I should choose between a big bank, like big bank meaning like a Chase or Bank of America, or if I should go with a credit union. I do bank at a credit union currently, and I still had a big bank account as well, like an account at a big bank. I didn't know if I should do a credit union, if I should do a big bank, or if I should go to a local bank, more of a Michigan regional bank. And I did a lot of research before choosing my bank. So I suggest if you are looking for a lender that you don't be intimidated to call and ask a few questions. One of the questions that I ask is, what is your current interest rate? Are there any discounts if I have an account with you already? To take off like maybe 0.25 if I have an account with you already and I'm doing automatic payments. What are some incentives for me to become a borrower with you versus going somewhere else? And then I also asked about their various conventional loan offerings that they had. Do you have any programs, mortgages for a low down payment? Because I didn't want to have a lot of cash coming out of pocket up front. So during my home buying process, I ended up getting an FHA loan. Now, a lot of people think that getting an FHA loan means that you don't have good credit or you don't have any money, you have low income. And FHA loans, that's not what it means. I have one, and I had an 800 credit score at the time that I purchased my home. So in no way did I not have a good credit score, but it only required me to put down 3% of the purchase price, which is what I really needed at the time because I knew I was going to make renovations to any home that I purchased. So one of the questions to ask a lender is, what are their conventional loan offerings that they have? And they'll most likely have an FHA, but do they have anything outside of an FHA loan? Because when you do get an FHA loan, you do pay PMI on the loan for the life of the loan. If you don't have 20% down, which most people do not, if they get an FHA loan, they have to pay PMI for the life of the loan. So I'm going to back up because a lot of people may not even know what I mean by PMI. PMI is mortgage insurance. So if you want to buy a home for, say, $100,000, and if you do not have a $20,000 down payment, then you have to pay mortgage insurance until you get up into 20% of equity in the home, meaning that you pay that much into the home to have the equity. And I did not want to have to put down $20,000 for a home for a conventional mortgage. And also, even with the FHA loan, you still do have to pay PMI, but with some conventional mortgages, you do not have to pay PMI once you reach 20%. But with a FHA loan, no matter where you are in your equity, I know for my FHA loan, we're going to ask Shawn Jones about that in a moment. I know for me that I still have to pay that going forward, but I knew that before signing my papers, and I was more concerned with having more cash in my pocket when I purchased my home. So again, I purchased a multi-family home because I had the intentions in living in one unit and renting out the other. And I'm currently still doing that. So that means I live with no rent or mortgage to pay, because the way that I did my analysis, my tenants pay for the mortgage, they cover the taxes on the home, and they even cover the insurance on the home. So when I was running my numbers, I wanted to go with FHA because I wanted to keep as much cash in my pocket as possible to be able to do renovations. So if you're just joining, I'm explaining like the mortgage options that I was considering and why I ended up getting a FHA loan. So one of the things that's why I wanted to have a mortgage banker on, to really talk to an expert. I can talk about my experience, but I think it's important to talk to people that do this every day. I bought one home conventionally, and then I bought my other real estate property in cash. So I've only went through the mortgage process once, but I want to have a expert on who does this, like I said, every day. So if you have questions, you will be able to ask a expert what they do and what they're looking for when they approve someone in the home buying process. So if you have any questions if you've gone through this process before, or if you know someone, you've heard like different myths, or is this true? I heard this. Ask those questions tonight, because we're going to get to the bottom of it and what is true and what is untrue. So another thing that I want to point out, this week we're going to have different people on. If you're just joining, Shawn Jones will be joining us in a few moments. But the other people that I'm going to have on, like Rochelle, who is a not mortgage broker, she's a real estate broker. She gives good insight on what you should look for when you have a realtor or real estate agent, I'm sorry, and you're looking for a lender. What your real estate agent could be providing for you as far as their resources, and her perspective on pairing a home buyer with a lender. So you're going to get that perspective from an actual real estate broker, what their opinion is on lending. Not too much in detail, because that's what we're going to go in today, but I want to have different perspectives on as well. And hold on one moment. And technical difficulties. Hold on one second, guys. I'm trying to bring in the guest for today. One moment. All right, Sean is joining us. I just trying to see what's going on his end. He is joining us, guys. If you're just joining us, I'm waiting for our guest to log in. He's having some issues with the link. Hello, Mr. Shawn Jones.
Hello.
The guy who was never late was actually late today. So I'm still glad you are able to join. I was telling everyone a little bit about you, that you are a senior mortgage banker at a big bank and you do this every day. So you're definitely an expert in the field to be able to get some insights on the mortgage process. And also going to be talking a little bit at the end about home equity loans briefly, because I know some people have questions about that.
Okay.
But without further ado, you want to introduce yourself and then we can get into some topics.
Sounds like a plan to me. So, just like you said, Shawn Jones and all the other stuff you said is all me. Mortgage banker, been doing it for quite a while. Worked for a pretty significant lender in the country, one of the largest. Pretty well versed in all different mortgage programs, and yeah, ready to answer some questions.
All right. So let's just first talk about, I already gave a disclaimer out because I know we're both licensed, but to get a disclaimer that this does not take the place of you talking to one-on-one with the mortgage banker in your area. Shawn is licensed in over 20 states, but not taking the place of that. So let's talk about pre-approval. I want to buy a house. Where do I start? If I already have my real estate agent and I'm trying to figure out the amount that I should get, or just what do I qualify for? And I call you and I say I want to buy a house. What are some items that you're going to ask me for to even figure out how much I qualify for to buy a home?
So first, you should talk to someone like me before you even contact a real estate agent.
Okay.
Um, Most realtors will want to know that you're pre-approved or pre-qualified uh, before even showing you any homes or really taking you seriously.
Okay.
Um, but there's three major components to a pre-approval: income, assets, and credit.
Okay.
So those are the three things that any lender is going to look at when they first speak to you. They'll want to know, obviously, your credit score, uh, the amount of income you have on a monthly basis,
Okay.
um, and obviously assets. And we also kind of want to know the type of home that you're looking at, but that's not as important as those
What
three things.
Okay, what's the ideal credit score that you're looking at when someone contacts you to get a mortgage?
Um, well, ideal would be 720 or higher, um,
Okay.
but that's not.
720 means you have a great credit score. A lot of people don't have a 720 credit score. So what's the lowest that I can have to get a house?
Well, on average, so I'll say the lender that I work for, we will accept you with a credit score as low as a 580.
Okay.
Um, a lot of lenders are going to want to see you either at a 620 or a 640.
Okay.
You do have some smaller lenders that also will, believe it or not, they'll accept you at like a 500. So
Oh wow.
yeah,
Okay. Now, do you know if that is typically like credit unions, or you're just not sure, but you just know some lenders will take as low as that, but that's just depending on that institution?
it just depends on the institution. It's not necessarily just credit unions, but some lenders are just open to a little bit more risk than others.
Okay. So, credit score, if I have this credit score, say I have a 600 credit score, and I'm like, okay, there should be no problems with me getting approved for a mortgage. You mentioned access and all this other stuff that I know a lot of people are like, okay, this is not accounting class. What break this down in layman's term? Like, okay, I got a credit score. Let's say I got a six. I have the 620. I've been working hard, and I've got my credit score is a 620, and I want to buy a home, and I'm thinking this is the main thing that I need is my credit score to be high. What else are some things that will make an impact?
So I'll just go one by one. Uh, First thing, like I said, income. You don't have to have a lot of income, but you have to have decent, steady income. That's
Okay.
important. And believe it or not, most people cannot get a home with zero down.
Okay.
So you need to have assets, money in the bank, checking, savings, IRAs, 401ks, things like that, places where you actually have access to your money. And you can also get gifts from friends or family.
So Tanya says, if my score is low, is a higher deposit required? Is that even
No,
a thing? Okay. That's not a
no,
thing.
it is not. That is a huge misconception. A lot of people think they can, not to be crass or disrespectful, but a lot of people think that they can buy themselves out of a bad credit score. So I'll just put more money down and that should cover that. It doesn't.
Okay.
Typically, if your credit score doesn't qualify, the amount of money you have doesn't matter.
Okay. So let's say I won a home, $100,000. I had a 620 credit score, but I have a lot of debt. Like most people, I went to college, got student loans. I got some credit card debt. I have car loan debt. Still have a 620 credit score. How much does the current debt that I have impact on how much I can get approved for? Like, what are you? And I refer to it as debt to income ratio. But
Yes.
if you don't understand that term, if I have a lot of debt, what are you looking at to determine how much I can afford?
So debt to income ratio is a good way to explain it. I'll explain what that means, though. What we're looking at is the amount of income you bring in monthly
Okay.
versus the amount of debts or revolving debts that you pay out monthly.
Okay.
So one divided by the other gives you your debt to income ratio. The average lender does not want your debts plus your mortgage payment to use up more than about 45% of your gross monthly income. So a good thing a lot of people can do is like look at their different revolving debts, like their credit cards and the automobiles and any like outstanding loans that they may have. Look
Okay.
at the monthly payments of those, add those up together, and see what percentage of your gross monthly income does that use up. So that gives you a good starting point to know where your debt to income ratio is going to fall before obviously you add a mortgage payment to it.
Okay. And so is there, if I Google debt to income ratio calculators, do those exist? If I want to try to play around with that to see on my own?
I've never heard of one, which is
Okay.
why I typically give out the formula that I just gave you.
Okay.
But there are a lot of mortgage calculators, but debt to income ratio calculators I've never actually heard of myself.
Okay. So if you need Sean to repeat that, let us know. And I want to see 1 second. Want to make sure that we're on both Facebook and YouTube. I see some comments come through from YouTube, but I don't see anything from Facebook. So let me make sure that we're actually live on Facebook.
I did notice on Facebook, I don't know if people noticed me looking down, but we do have I can see a couple people are watching on Facebook as well.
Okay, yeah, I see. I see it as well. So I'm gonna go ahead and make sure I see that we're going. I wanted to make sure that we're on both platforms. Okay. So if you need, like I said, if you need Sean to repeat that, I think he may have did that when I was checking, but that is so important to make sure that you actually qualify. It's just not about the credit score. Now, what I want to talk about is small business owners, because I know have some friends that are entrepreneurs and they want to own a home and they have a hard time getting pre-approved. What are some things that small business owners are going to need when they apply for a loan?
So that's a good question. It's funny, believe it or not, small business owners are probably some of the most successful people in the country, or business owners, period, are some of the most successful people in the country, but typically they do not, in most instances, qualify for mortgages. The biggest reason is they don't like to pay the government a lot of taxes, which I get, but because of that, they show a lot of write-offs on their taxes. which limits the amount of income that we can use to qualify them with, because we have to qualify you based on the amount of income that you tell the government that you can pay taxes on. So after all write-offs, a lot of small business owners like to show negative on their tax returns. And it kills them when they go to try to get a mortgage, just puts them in a really bad spot. So I would tell any small business owner or business owner, period, if it is your goal to own a home, you have to show income on your taxes. I know it's a tough pill to swallow, but it's what it is. You have to pay taxes because you have to be able to show that you earn an income. You're earning a decent living in order to purchase a home.
Okay, so I see some people joining back in. So we're just at step one, pre-approval process, going through the credit score. The big bank that Shawn is at, you can have a 580. It's really dependent on the institution, but most likely you will need to at least have a credit score of 620. We talked about debt to income ratio. It's not just about your credit score, but how much debt do you have in total? Because if you have high monthly payments, that's going to limit the amount you can be approved for from your home. And we just talked about if you're a small business owner. So if you're a small business owner, it's important that on your actual income tax returns for your business that you are reporting income. Because if you are going to apply for a mortgage the traditional way of going with a mortgage lender, they're going to want to see profit. They're not going to want to see net income. So I know as a small business owner, and I know I'm a CPA, so I get a lot of people come to me all the time and saying, like, I want you to do my books. I want to make sure I have everything written off. And it's always my question, if you're planning on scaling up in your business to get a business loan, not even just a mortgage, banks are going to want to see that you're actually profitable and not writing off everything under the sun and you are losing money every year. So that's just something to keep in mind. So talked about assets, we talked about the credit score. So say I have all of that, I get my pre-approval. Rochelle's going to be on tomorrow to talk about working with Realtor and going through those steps. But let's say I find my home. I find my dream home. I qualified. Now I want to make an offer. What do I do? Do I need to contact my lender before I make an offer? Like, walk me through money coming out of my pocket once I find my dream home.
Okay, so one thing I would suggest is after getting a pre-approval, that you get a full approval.
Okay.
Every lender does not do that, but if you can find a lender that does a full approval, or in my case, my employer, we call them verified approval letters. Okay. If you can find a lender that does that, that gives you a better chance of getting your offer accepted.
Okay.
Because a pre-approval is really just based on verbal communication. Basically, just what you tell me verbally, I just take you at your word and I pre-approve you based on that. But a full approval or a verified approval shows that your whole profile has been underwritten by a lender, so they know that you qualify. So if you go into an offer situation with a full approval versus a pre-approval, and you're in a multiple offer situation, you have a much better chance of getting your offer accepted over the person who has a pre-approval. To circle back to your question, what do you do if you want to place an offer on a home? Before you even tell your realtor that you want to place an offer on the home, call your lender, call your mortgage banker, let them know that I saw this house, I love this house, I want to place an offer on the home. The home is this amount of money. The reason you want to do that is so the lender can then give you an idea of your responsibility for the home before you commit to an offer. You want to know what your down payment is going to look like, what your closing costs are going to look like, what your monthly payment is going to look like. You want to know all those things before you commit yourself to an offer.
Okay.
After you have that conversation with your lender, if you're happy with all of the numbers, then you want to get with your realtor, sit down, talk about what you want to offer, put together an offer letter, and place the offer on the home.
Okay, so I do have a question. Iris wants to know from YouTube. Thank you for watching. What about school loans that are still not in repayment? I'm still on school but work full time. So I think when we were talking about loans and stuff, preparing for this, we talked about student loans and forbearance and the repayment program. Can you talk a little bit about that and how that impacts?
Yep. So that's a great question. So when you're looking at mortgages, there are multiple mortgage programs, and different mortgage programs look at student loans in different ways. Um, some mortgage programs will look at the actual payment that shows up on your credit report and use that to qualify you with. One of the most popular mortgage programs in our country, FHA, looks at your student loans in a different way. It'll look at the amount that you owe. So it'll look at your balance that you owe. And then we have to, as your lender, take 1% of that balance and use that or show that as a payment to calculate into your debt to income ratio.
So I want to pause right there. So you're saying that's the standard for FHA loans?
Yes, that is a standard for FHA loans.
So if it may not matter how much my monthly payments are. So let's say my monthly payments, I'm in medical school, I'm gonna be in residency for like the next 3 years. So that's not gonna be if I went a non-FHA way, that's not gonna be calculated in my monthly payments, right?
If it shows in forbearance, if you're not looking like at FHA, then there is a good possibility that you could get in a program that may not calculate or count those payments in. It is a possibility.
Okay. But in this,
there are different conventional mortgage programs that are available. Some are going to still count a payment. Some will say, even if you don't show a payment, we have to at least show like a $10 payment to count into your debt to income ratio.
Okay, but the 1% for FHA, you were
But it's
saying
1% for FHA. So even if you do not have a payment at all, hypothetically, if you have a balance in your student loans of like $56,000, the lender has to take $560 and show that as a monthly payment for you for your student loans and count that into your debt to income ratio.
Okay. So whatever the 1% is. So Iris, let us know if that answered your question or not. Rochelle, who's going to be on tomorrow, work with a good real estate agent. I agree with many of Shawn's suggestions. Unless you find an educated realtor, that puts the buyer interest first. So thank you. It's gonna be on with us tomorrow with a lot of her tips and insight. So we were talking.
Just let me say, I do agree with Rochelle. It is very important to have a good real estate agent that works with your interest in mind. That is so important. I do agree.
Okay, so now you talked about verifying those numbers, right? As far as like if I find my house, call my mortgage banker and say, hey, this is what I have, this is what I'm doing, and go to those numbers. So say we go through all of that, I can afford this home. What happens next? So my real estate agent, submits the offer and it's accepted. What happens now?
Oh, so once your offer is accepted, that's when the fun starts. That's when the party gets started.
Right? That's the whole point of this whole process.
So now you're in the process of actually buying a home. One of the biggest steps after getting your offer accepted is giving a earnest money deposit. And Rochelle will probably be able to speak more to that when she comes on. Because in my experience, the earnest money deposit is usually somewhere between 1% to 2% of the purchase price of the home. That's money that you give to basically show the seller that you're serious and that you want them to actually take the home off the market, to unlist the home. After that, you're going to sit down with your mortgage banker. You're going to look at some different options. So, because there's always going to be multiple options in most cases, I should say, not always, but in most cases, there are multiple options that you can look at. You can look at different terms. There will be different interest rates and things like that you will be able to look at and that you will actually be able to choose from. lot of people think that lenders give you an interest rate. That's not how it works. You'll actually be able to choose the rate that you want to go with. So you'll sit down with your banker, come up with a good plan for your mortgage, how long you want to be in your mortgage, how long you plan on staying in the home. All those things kind of play a part into the program that they're going to put together for you. And then after that, hopefully your offer gets accepted and you can put your mortgage into place.
Okay, so I have another question. Tanya Phillips says, what determines your house payments, your mortgage? What determines how much you're going to pay a month, I guess, when you look at a home?
There's typically four things. There's principal, which is the amount of money that you owe after your down payment. There's interest, so that's based on that interest rate that we just talked about. Then there's your property taxes. And lastly is your homeowner's insurance. In most cases, those four things make up what you pay monthly for your mortgage. Some people choose to not have their property taxes and homeowner's insurance included in their mortgage, but most people, at least in my experience, have all four combined. Yes, Rochelle, the pity.
So we're moving through the process because I like to have, I want to make sure that you guys are following along. We talked about the pre-approval process, so we're going back to questions. So Deidre White, if I have a car loan, would it be hard to get a home loan, or would it count against me for having several loans?
Another good question. So that is kind of situational. It does not hurt you to have a car loan. It will not make it, quote unquote, harder for you to get a mortgage, but your monthly payment for your car and the other loans that you mentioned there, as you say, several loans, those monthly payments do count into your debt to income ratio. So the least amount of debt you have, the more home you can buy. So I don't want to say that it negatively affects you, but it does put limitations on what you can do or what you can buy. So
because I know I'm breezing through because I'm already about to start talking about underwriting and closing. So what I want to do is take a pause here and let's talk about some numbers. I know you look like you're in the office to run through. Got a calculator out, handy dandy calculator. Let's talk about some numbers. So for people, so it can put it in perspective. So if I want to buy a house that's $100,000, right? And let's say right now I pay rent for $800 a month, and I have a car payment, my student loans. Does my insurance count as my monthly payment? Like my auto insurance, does that count as a monthly payment when you're talking about what I could be approved for?
It does not. The only things that will count into what we use to calculate your debt to income ratio are things that show up on your credit report on a monthly basis. And car insurance is not one of those things.
So only the debt that shows up on my credit report. Okay, that's good to know. And I want to let you know too, right now, if you go to annualcreditreport.com, that's the only place you can get your official credit report. It's not like I'm not plugging my own website here. That's the only place you can go to get your official credit report. And now because of COVID, you can get your official credit report from all three bureaus for free every week. Like every week. That's crazy because they only used to let you get it once a year. So you can get it from all three bureaus once a week. And so I know during the pre-approval process, your credit score matters. And a lot of people come to Mr. Shawn Jones and say, my Credit Karma score is a 815. There is no way I should not be approved. So what are some things that you say to that? If I'm on Credit Karma and I see I have 815 and you telling me that my credit score is not 815, how is that a thing?
So what I typically tell my clients is, so Credit Karma is a great resource for tracking your credit usage, but Credit Karma is not a great resource for tracking your actual credit score. What Credit Karma gives you, and Tasha, she loves when I say this, but what they give you is a consumer's report.
Right.
It's not your actual credit report.
Right.
The only way you can get your actual credit scores is by doing what Tasha just told you to do, by going through the 3 credit bureaus, or speaking with someone like myself who has access to pull up an actual credit report for you. On average, this is not the gospel, but on average, Credit Karma is usually anywhere from 20 to 50 points higher than what your actual credit scores are. So
Okay.
and
And
not lean on that as the gospel.
I find that too, because when I talk about credit and talk about credit education, people are saying I'm looking at Credit Karma to see what I qualify for a home or whatever. FICO is your official credit score, and the FICO mortgage calculator, you have to pay for that. But that to me gives you a little bit better insight into what your actual credit score would be. But instead of going through all of that, you could just apply and see what it is from their lens. But what you see on Credit Karma, Credit Sesame is not going to be what a home mortgage officer is going to see when they pull your credit score. Like Shawn said, it could be usually on average a 20-point difference. It could be higher than that, depending on what they're looking at, what's on Credit Karma. So when you go to annualcreditreport.com, you won't actually get a score. You'll just get the detailed reports. But that's a chance for you to clear up anything that's on your report. Because if you have anything that's late payments, you have any public records on your credit score, on your credit report, that's bringing down your score. So if you know you are in the market for a home, you want to pull your official credit report, see what is in the red. If you see a lot of red or yellow on your credit report, that means you have late payments. And that's going to be bringing down your score as well. So you can still use Credit Karma or Credit Sesame as a guide to see what your score is, but your official credit report from the 3 bureaus will tell you your report, but it won't tell you the score. The best way to get your actual score is really through FICO and paying for that, because even when you go through Experian or TransUnion, those scores are your Vantage scores, and they're still not the scores that mortgage lenders are going to be using. But use it as a tool for you to get on the right track to get your credit where it needs to be. Okay, so
Agreed.
payment. So let's just say, I want to go back to that example. Let's say that I bring in, if I make $20 a year, I'm making $40,000 a year. Let's just say I'm bringing in $3,000 a month. After taxes, I'm bringing in $3,000 a month, and my payments right now, with all the debt that I have, is about $1,900 a month. And then with my rent, and everything, I'm close to like $2,500 a month, because I have a lot of student loan debt. When I had the car that I have, I had a horrible credit score, so I'm paying crazy interest. My payments are really high. I have a lot of student loans and a lot of credit card debt, a lot of store credit card debt. If I have $2,500 in monthly payments, let's just say $1,900, like I said, was debt. $1,900 out of $3,000. How much of a house can I get? Will I be approved? If just thinking about those numbers to give people perspective.
No, you will not be approved.
What? Well, my credit score is like an 800. Why would I not be approved?
You have great credit, but you have bad money management skills. So no, you will not be approved.
Okay.
So just looking at the numbers that you gave.
There's some really high numbers.
Yeah, and to reference back to what I said earlier, when we are looking at your debt to income ratio, on average, most lenders want to see you at 45% or less. So 1,900 of 3,000 is like 63% of your gross monthly income. So you need to rethink what you're spending money on and try to clear up some debt before buying a house.
So 65% is that number. I want to see whatever I'm bringing in a month. I want to have this 65% of that actually be payments.
45.
I'm sorry.
And actually, you wanted to be less than 45 because we have not yet included a mortgage payment.
Let me make that on there. Less than 45%.
Yes, I would say let your bills not be more than 25% of your gross monthly income to give you room to add in a mortgage payment, because
So
the
again,
mortgage payment is added into that calculation as well.
so I put less than 45%. Is that right? Less than
Yes.
45% of my monthly payments for my debt that's on my credit report. Because after this, I'm gonna go to annualcreditreport.com and I'm gonna pull my official credit report and eventually see like all my debt that I have. It'll list what you're paying a month too. That will get you want that to be 45% or less than what you're bringing in a month. Not what your is that gross or net? Let me not mistake.
It is gross.
Oh, it's gross. So that give me
Yes.
a little bit more wiggle room.
Yep.
So
it is gross.
it's not counting my 401k contributions. It's not taking me down for my medical payments. It's just looking at my gross income.
Yes.
Okay, that's good. So
a lot of lenders don't use, like, some people get paid with like stock options and things like that. A lot of lenders do not count that as income. So subtract that from your income when you're looking at your gross monthly income.
Okay. All right. So
you have a lot of people who work for Google and places like that, and they get paid stock options. So
yeah, that is true. You are licensed in 20 states, so it's not just Michigan. If you're watching from other places, this is just not a Michigan thing either. So if you have questions, 27, I'm sorry, let's get the number right. You are licensed in 27 states. Let's get this all the way together. All right, I don't see any more comments coming in. I really want to give some example behind numbers because I know, like, I love talking about money all day and using percentages, but I know for a lot of you, you're like, I don't know percentages. So what are you talking about? Less than 45% of what your gross income is per month. So
per month, yes.
If you have questions, make sure you're dropping it in. I really want this to be helpful for you as you're watching this. So I want to go, let's go to underwriting and closing. I want to, before you start, I want to give my perspective, like
Please.
my pre-approval. I just felt like I had to give all my information. I had to have my W-2s. I had to have my tax, like my W-2s for my employer. My last couple of years of my tax returns, all my bank statements that I have. So I have W-2 income, but I do have small business. So I had to have all my small business bank accounts and like my asset statements. So my 401k, all my retirement, I had to send all those statements in during the pre-approval process. So when it got to underwriting, I paid my Earnest money deposit. In my situation, it was $1,000. And I go through all the inspection, appraisal, everything is just going through the process. If you want to know more about that, we're going to have Rochelle on talking about the details of that. But right now, we're just talking about the money for today. So now we renegotiate. We are done. Me and the seller, we agree on the purchase price. And now it's time for underwriting, right?
Yes.
So what is underwriting?
The biggest part of underwriting, I would say, is verifying all of your information. So verifying that you work where you say you work, confirming that your income is what you say it is, confirming that your income is still what you say it is, especially in this climate that we're in right now with the COVID-19. Some people have been laid off, they're not working. So all those things have to be verified. Your assets, another point on assets, verifying that your assets are what you say they are. Also verifying that your assets are coming from where you say they are coming from.
Okay.
Making sure that your assets are in a financial institution. You cannot use mattress money to buy a house. You can't have money like in the cereal box on top of the fridge and just say, yeah, I got 10,000 right here. That money does not work. Any monies that you use to buy a house have to be sourceable and traceable funds. So that is one thing that underwriters are going to check. And then they're also going to look into the property as well. They want to make sure that, the title is clear on the home and things like that. There are no back taxes owed on the home and things like that.
So I just felt like underwriting was just driving me crazy because I already gave y'all all this information during my pre-approval process. Why am I giving you? So I had to, because how often do you have to submit for stuff? Is it every 30 days, every 2 weeks or whatever? Because I felt like I had to keep submitting my pay statement. And my process was short, but I just felt like I had to keep sending stuff. Like, so how often in underwriting you have to keep updating the information that you send?
Well, that to an extent is lender specific. A lot
Okay.
of lenders are going to want to have you have they want to have a pay stub that's dated within 30 days.
Okay.
So when you come to closing, the pay stub that they have should be dated within 30 days of that closing date. Again, excuse me, just to verify that your income is what you said it is, and it is what it has been in the past. And with asset statements, they usually want to see those within 45 days.
Okay, and I just want to give some tips if you are going through, the home buying process. Just make sure you have all your bank statements. Everything's electronic. Like, make sure you are ready to be responding to these emails from underwriters. And you have, if you need to scan, you have stuff that's legible because they're going to be making requests. So one of my requests was they wanted to actually verify that I lived where I said I lived. So I had to actually get a notarized letter from my landlord saying that I lived where I said that I lived. It was something. I did some rate shopping too. When I was going through my home buying process, I started with a local bank, and it took forever for them to get back with me about a pre-approval letter. It was a weird situation. I had went through 2 pre-approvals, and the second time they were taking forever. So I decided to go to a big bank, and I end up going back to the local bank. And the reason why I'm giving you all that detail is because in closing, they said, why did you apply to another lender? So I had to write another letter and submit it to underwriting to say why I had another lender pull my credit. So it's just all this type of stuff that underwriting is going to be asking for. So just be prepared. It like Shawn just said, it depends on the lender, what they're going to ask for, but this is where deals can kind of fall apart. And I'm saying that because I've known small business owners to have a deal fall apart in underwriting because of the verifying of the assets. Like you just said, like if you're a small business owner, you may say, I want to write off everything. Every time I go eat, it's the write-off because I'm a business owner. And when it came to underwriting and verifying certain things, it crumbled. And they didn't get the house. So I have a question. What about FICO scores offered by banks? I know Citibank offers credit FICO scores for you. Have you seen anyone say that their FICO score with a bank is different from what you've pulled?
Yes. So with that, like I bank with Chase. So I have a credit card with Chase. Chase has a system where they will give you your credit score. I believe Capital One does that as well, and some other banks. Those credit scores pretty much mirror what you would get from Credit Karma. So do not lean on that as an accurate credit score for yourself. If the bank has not pulled your credit for any type of loan, then it's probably not what any lender would use to loan you money.
And I want to just say, there's so many different FICO scores. There's a FICO there's a FICO car score. There's a FICO mortgage score as well. And what you'll see is when you see from your bank. So I have a Citi credit card, and it'll say this is your FICO score, like 9 point whatever. And that FICO score goes up to 900 or 950. And you'll see that your credit score should only go up to 850 when you're pulling from a mortgage, right?
Yes.
So if you have your FICO score and you see that FICO score that whatever bank, Citi or whoever is giving you, if you look on a dial, you'll see it goes up to 950. That lets you know right there it's not going to be on point with what a mortgage lender is going to pull. So I hope that provides some clarity to you. But a lot of times for you to actually see what is similar to what a mortgage lender is going to pull, you probably are going to have to pay for it through FICO.com. I'm not saying it's going to be 100%, but it's going to be closer than what a Credit Karma or your bank FICO score is giving you. Because again, it's similar to like a consumer report, like you mentioned earlier, right?
Yes, that is the most accurate credit report that you can get is when you pay for your credit report. And I'm not saying when you pay for membership with Experian for like credit protection or something like that. I'm not talking about that. That's still not your accurate score. You have to pay for an actual credit report.
Okay, so underwriting, finally making through underwriting, everything is good. Now closing costs. What is closing costs? Like, what am I paying? Why am I paying more money? I gave an earnest money deposit. Why I gotta pay more money? Now what's going on here?
So closing costs, I like to compare it to sales tax. So you go to the grocery store, you pick up your essentials. Your essentials add up to $35. After everything is rang up and the cashier asks you for money, they're not going to ask you for $35. They're probably going to ask you for $38, $39, or $40. It is it's like taxes. So there are just a few components that make up closing costs. And these are third-party fees. These things are not specific to any lender. You'll pay this no matter what lender you go through. You have your taxes, property taxes, homeowners insurance, title work, appraisal, transfer taxes, recording fees. Those are the major components of closing costs. And then also there is a lender specific fee, which is called an origination charge, which is usually a processing and underwriting fee. You do have to pay that to a lender. Now that is different between different lenders, but on average, it's usually somewhere between $100 to $200 between lenders. So it's not that big of a difference from one lender to the next when it comes to origination charges. The other thing that goes into that is how much you pay for an interest rate. Interest rates have price tags on them. Lower rates are going to cost more than higher rates. So depending on what you and your mortgage banker come up with as the best situation for you, that will determine what interest rate you'll have, how much you'll pay for that rate. And those are the things that will together make up what you pay for closing costs.
Okay. One more question came through about credit. When I pull my own score, is it a hard inquiry? No, it's not. When you pull your credit score through Credit Karma, even when you pull your official credit report, when your bank, like Iris just asked about if your bank gives you a FICO score, those are all soft inquiries or soft pulls, and it's not counting against you in the mortgage process. So that's not showing in bringing your score down. Even when you rate shop. So like I mentioned before, that in my underwriting, I was going to switch lenders. And so I had another lender pull my credit score within like a 2-week period. So talk about rate shopping for a minute. If I'm going to see if I want to go with a big bank, a credit union, or whatever, is that tremendously hurting my score if I'm shopping around for rates?
So as a mortgage banker, I don't like for people to shop me. Kind of offensive.
Okay.
But it does not hurt you. You actually have a 45-day window to have your credit pulled and checked by as many lenders as you like. And as long as it's being pulled for the purposes of a mortgage, then it'll only show as one pull in your credit report. All of those lenders access the same report.
And Tammy, yes, they're doing it free now for the next year every week. So your official credit report. So Rochelle had another thing, 100 or 200 total. I'm not sure what you're talking about there.
So she's talking about the origination charge that I was talking about between lenders. Again, I said on average, there's a $100 to $200 difference between lenders. But I would say on average, the total cost of just processing and underwriting is usually somewhere between $900 to $1,200.
Okay, so I'm pausing because I'm plugging. If you do not know, Financial Garden has a chance to win $100,000 from Essence and Pine Sol. And I am doing this for you all because I think it's important for people to be financially educated. Not only am I doing this for adults, I do this with educators. I provide professional development and I go into schools. I have reached over 700 kids in Detroit and surrounding areas. So go to financialguarding.com so you can vote for me to win $100,000 in this Essence competition. All right, back to regularly scheduled program. So
I voted.
you voted. You better have voted for me.
Voted.
I'll have it scrolling at the bottom of the screen. If you missed what I was just saying, Nate, you have a question for us. How will soft inquiries impact your score, and how long does that reflect? It doesn't impact your score. So, and I'm for sure like saying this because at my credit union, I have another property and I had did a home equity loan and I walked in and I'm like, what would I be qualified for? I don't want you to pull it. And they're like, oh yeah, you've been with us for 10 years. So they're like, we just pulled your score last week and they told me what it was. I never does not impact my score at all. The inquiries stay on, I want to say 7 years. And then they fall off. I'm going off the top of my head right now. But soft inquiries does not affect your credit score. Only when you're applying for something that's a hard inquiry and that is affecting your credit score. So let me know if that's clear. If not, definitely let me know back in the comments. Okay, so we talked about like the closing costs or whatever. So I'm gonna take this off. That may happen. I want to tell another story about my lender. I know you're probably thinking this lender must have sucked.
I just want to say I was not her lender, so she's not talking about me. What you said.
Yeah, you were not. I did not know you when I bought my house and I was going through this. I did not know you. I should have, so I wouldn't have gone through all this. But closing costs. So what happens? So Shawn broke down what goes in, what makes up the closing costs that you have to pay. You have to have this money on hand. So when you're thinking about buying a house, like this is additional cost. You cannot have borrowed money to do this. So Shawn touched on this. So I want to say that my closing costs for my house I purchased for $110,000. My closing costs were like $7,500, right? So I had to have that money on hand to be able to pay at closing. Like I had to have a certified check for that amount. And the closing cost that rolls in your down payment too. So it's all your down payment, everything that you said. I'm like drawing a blank on what you said because I was looking at comments when you were talking. It takes into account all of that. So I'm seeing you over here in the comments. I'm coming back. So if you don't have enough money, you can't go and say, I'm going to go get a cash advance to pay for that, right? Can I go and ask a parent or a friend for that?
Sort of, kind of. Maybe. It depends.
Okay, so break that down. So I'm short $800 and I'm not going to have it for 2 more weeks and I'm pushing closing off. So my seller is like, listen, we have been going back and forth. You going to buy this house or not? And I need to have this money because that's true. I'm just using $800 as an example. I really don't have any of this money. If I just sneak and go ahead and put it on my credit card, are you going to know?
Oh, yeah.
Okay, you are going to know. You're going to find out. So then what if I go to my mom and say, can I have $800? And then I put it in my bank account. What are you going to ask me? Like, how come I can't just do that? What's going to happen?
I'm going to ask you, where did that money come from? You can't make any large deposits into your bank without being able to source and verify where those monies come from. And again, like I said earlier, all monies used to purchase a home have to be sourceable and traceable. Another thing that you just touched on, and one thing that I always tell my clients, you cannot use borrowed money to borrow money. You can't use a loan to use or pay your down payment or closing costs. You cannot use a credit card because that again is borrowed money. That's something that you have to pay back. So you cannot use borrowed money to borrow money. You can get a gift from your mom, your dad, family member, you can get a gift. But even that money has to be sourceable and traceable. So whomever you're planning on asking for a gift from, make sure that they're okay with providing bank statements and sourcing where their money comes from, because they will have to do that. And they will also have to sign a document stating that this money is a gift and they are not expecting any repayment of that money. So
Okay.
you can get a gift, but it has to legit be a gift, and it can't be mom's money that she keeps stored like in the stove or something like that. It has to be money that comes out of the bank or out of her
So even
401k or
when
something
my
like that.
mom gives me the money, you are going to trace her?
Mama has to give up some statements. She has
Oh
to
my
show where her money
God.
comes from.
This is a lot. Okay, so now like when you are going to get a mortgage, they are all up in your business trying to figure out where the money's coming from, even if you get a gift. So we went
That's
through a
it.
lot today, and I've been numbering it. So you know we are done with this. So after you have the money, your mama give you the $800. You you get the money. Then you had a certified check. You spend at the closing table. You sign a million documents, and you get your keys. You're done. Now I want to touch on home equity loans and HELOCs. What are the differences, and what should I consider if I'm right now? I'm seeing all these headlines that the rates are the lowest they've ever been, and now I'm like, oh my God, let me take the equity out of my home before the home value goes down. There's just a lot of headlines, and it's making everyone crazy. So can you shed some light on what it means to get a home equity loan, and what are some things you should consider before getting one?
So first and foremost, people have been seeing a lot of stuff on the news. Uh, Rates are down to 0%, all that type of stuff. Those are not mortgage rates. Just so you know,
Okay.
those are not mortgage rates. But mortgage rates are the lowest that they've been in 50 years. And they've also been this low for probably the past 7, 8, maybe even 10 months. So this is not a new position for the rates. They've been there for quite a while. But people are in an uproar because they saw 0% on the news, and now everybody is, finding out that rates are low, and they're
Yeah.
taking advantage of it. Taking cash out of the equity of your home, a lot of people do that to pay off debts and things like that. And some would say that's a bad idea.
No, I do not think that's a good idea. I'm going to
um,
insert my opinion here. I do not think you should not take secure debt and pay off unsecured debt. If you have credit card debt and you want it's high interest rate and you're like, I'm gonna take advantage of take equity out. No, I'm you need to definitely work with getting a budget together and maybe increasing income, making cuts or whatever. But I would never take out equity in your home to pay off a credit card bill. That just doesn't. No, I don't care. Stop thinking about monthly payments and how much you're going to pay a month. Think about the big picture. And do you want to, if you start making payments on your credit card, right? The worst that's going to happen is your credit score is going to suck or whatever. If you start making payments on your house, you're going to lose your house. So do you want to lose your house if you are in the bind because of some credit cards? Like, that just doesn't make sense to me. I'm sorry. That's just me. You can fight me on it, but I'm just no. So
well, what I'll say is it depends on your situation.
yeah.
Because sometimes you can take the equity out of your house, pay off some debts with that, which in turn, basically, you're getting a lower interest rate on those credit card debts. Yeah, I saw that question too. Um, which basically you're getting a lower interest rate on your credit cards, because typically what credit card interest rates are, what, 15, 18%, something like that. And the mortgage rate right now is going to be more than likely somewhere in the threes. So you're paying a lot less interest on that debt. And in a lot of instances, you're pretty much rolling that debt into your mortgage. You can do that and also lower the term on your mortgage. Hypothetically, we can say you can go from a 25-year mortgage to a 15-year mortgage and still overall be coming out of the same amount of money every month that you were with your current mortgage and all the credit card debt with the high interest rates. So just depending on your situation, I think it could be beneficial. But
Okay.
one thing you want to look at is how much the refinance costs, because you do have to pay closing costs again, because this is a mortgage transaction. So you still have to pay all of those third-party fees. So just make sure that it makes sense. The good thing is with a refinance, you can roll in those costs, so those don't come out of your pocket. But you still want it to make good financial sense before you make a decision like that.
Tanya, if you win a lottery, you're not gonna need a mortgage. You should be buying your house in cash. So there's your answer to your question. But overall, okay. So overall, even if Rochelle said great strategy suggested for
Thank you, Rochelle.
I'm just gonna get the both of y'all on here so y'all can just talk. There is definitely I know y'all, it's definitely situations, but I am old school and I just no, do not switch it. But for me to do the equity, get a home equity loan from you, is that process different if I want to get a home equity loan versus a HELOC, which is a line of credit, which is taking out the equity of my home still, a loan versus a line of credit? Is there different things that I'm going to need? Is that process different? What are some things that I should consider?
So the process is roughly the same.
Okay.
Okay. There is a difference in your closing cost responsibility. A lot of times the cost will be lower when you do a home equity line of credit, but also in most instances, but not in all, but in most cases, you will have a variable interest rate on your line of credit. The line of credit is basically like a credit card, so it essentially works the same way. So you're going to have a variable rate, but one of the good things about a line of credit is if you don't use it, you don't pay.
Okay.
When you do take equity out of your home in the form of a cash out refinance, now you have another monthly mortgage payment that you have to pay. So that's one of the differences. And also, if you do the cash out refinance and take money out that way, you will, in most instances, you'll have a fixed interest rate, so you don't have to worry about the rate changing. So it just, again, it's situational. It depends on what you're trying to do, what you need your money for. If you just want security, just in case something happens, then the home equity line of credit probably works better for you, because it's just, access to money just in case. But, if you need money right now, or if you're in a situation where you need to pay off debt to get yourself in a better position for this or for that, then the cash out refinance may be a better option for you.
How much equity should I have in my home before considering doing a home equity loan? Do I need to have a certain amount? Because I know there's closing costs involved. Like,
most lenders will go up to 80% of the value of your home when you're taking cash out of your equity. So if your home, hypothetically, for easy math, if your home is worth $100,000 and you owe $50,000 on it, then that means you have $30,000 to play with. And that's within that $30,000 is the money that you'll receive, and also the monies that will cover your closing costs. So hypothetically, your closing costs could be $5,000. So that means you're left with $25,000 in your pocket.
Okay. All right. I mean, we covered a lot here today. So the good thing is the replay is going to be available for you on Facebook and on YouTube. So if you miss anything, you can scroll through and see where you stop, because I did outline it. When we went through pre-approval, earnest money deposit, we went through underwriting and closing costs and touched on home equity loans and HELOCs. So if there's no other questions, then we can just get ready to sign off and let people know where to find you, Shawn Jones, if they have any questions for you.
And so you can find me on Facebook, even though obviously I go by Shawn Jones. You can find me on Facebook at Shawn Jones. You can message me there. I'm happy to answer any questions. And yes, Rochelle, I would love to join, but I'm happy to answer any questions for sure. Or you can find me on Instagram at Mr. Shawn Jones on Instagram. So either one of those will work, and my page is open there, so you can message me directly there, and I'll be happy to answer any questions.
Okay. Well, that's it. Thank you so much for tuning in. Make sure you go to financialgarden.com, vote for me and my company to win this $100,000. And thank you so much for tuning in. I'll see you all tomorrow with Rochelle coming on, talking about going through the actual home buying process as a real estate agent working directly in the field. So, all right, see y'all. Bye.